Well, the Dow Jones is down 220 points right now. Some people are blaming it on the Tsunami nuclear reactor problem in Japan. I've been following the stock market for the last few weeks, and my information that I've been researching has showed that the volatility index was due for a rise. The S&P 500 was in a wedge formation, about to break up or down, and based on the last couple of days, it was poised to break down, which it's doing today, just like my research has indicated, technical analysis. And last week I got a little bit of cash in my pocket from the casino, put $400 check into my Scott Trade account. I was going to buy a put option on Netflix. Netflix has been one of the highest flying stocks in the stock market for the last year, a straight line up almost. It has fallen off pretty good in the last few weeks. And I was thinking about buying a put option on some high flying stocks because the higher up they go, the harder down they fall. And I was looking at Apple Computer or Netflix to buy a put option because both these stocks have been high flyers. The stock market, as my research indicated, was due for a fall. And the higher one, no matter how many profits they have and how good the company is, the higher up they go, the harder they fall when the Dow falls, which it's doing now, which my research indicated. And I compared Netflix to Apple. Netflix percent gain has been larger than Apple. Netflix has a very high 67 price earnings ratio. Apple's was below 20. Apple has gone up a straight line with good products and sales. Fundamentally, it's justified. Netflix, I thought, was overextended, and it had dropped off some in the last few weeks. Well, the Dow Jones is down 200 today. Netflix is up 10 bucks. Apple's down 8 bucks. Apple hadn't had a fall off. I was trying to buy a put option on Netflix yesterday, anticipating Netflix would fall down harder than Apple, that they would both fall, but you'd make more money with a put option on Netflix because it would fall down harder. Well, it's not falling down harder today. It's up 10 bucks while the Dow is down 200. Well, I guess my idea was that the stock market in general is due for a correction, a fall off. My research has indicated it. Technical research. Fundamentally, historically, the companies like Apple and Netflix that go up the most fall down the hardest when there's a stock market correction or a decline in the stock market. Because, fundamentally, they still have good earnings and profits and products, but they've overextended themselves. Now is my idea with Netflix. To buy a put on Netflix over Apple. And other, some research had recommended buying a put on Netflix. Maybe it was a couple of weeks ago because Netflix has fallen off, fairly decent 20, 30 points from its recent high. Well, Netflix is up 10 bucks a day. Apple's down like 7 or 8 bucks. And unfortunately, fortunately or unfortunately, I didn't make a trade yesterday because the money wasn't available. And I overextended myself paying bills over the weekend and going to the casino. So I didn't even have money in my account to make the trade anyway. But, my basic thesis was correct. Even though I don't have any money myself, the IRS did clear me up to make trades. I can make trades, I guess, according to the IRS. They're not going to confiscate my money right now from what they told me. But I guess I just paid too many bills over the weekend, overextended myself at the ATM at the casino, and didn't win. This weekend I lost instead of winning. I didn't get a $1,200 win, got a loss. Anyway, well, really the basic theory was the stock market is falling, and I would have had more cash. I was planning on buying put options on 3 or 4 stocks, and the 3 or 4 stocks I was going to buy, 3 out of 4 are way down. 3 out of 4 grand slams, 1 loser, you still make money overall. That's what I do. Theory, reality, the efficient market theory, you can't make money in the stock market. I said it was bullshit when I was in Purdue Cranford at age 22. I say it now, I'm 49. I'm not a billionaire. I will take Warren Buffett's open bet to any money manager. I call myself a money manager without a license. I'm not going to lie about it. I've been through hell trying to get a license. And the procedure's a bunch of crap here in this faggot-ass punk festival called Kansas. But I'll bet Warren Buffett I can outperform the S&P 500 over 1 year's time period. I won't outperform it every second of every day the stock market's open, and I don't claim to because that's what the old Wilbur Llewellyn said. Do you do it every day? Who gives a shit? I'm not here to outperform the stock market every day, the second of the day of the year. Over 1 year, I will make a bet with, the greatest investor of all time, Warren Buffett, if he is a real person. I'll bet him he couldn't pass engineering at Oklahoma State like I did. I'll bet him I can outperform the S&P 500 over a year's time with real money. Berkshire Hathaway's money, the cost of capital of Berkshire Hathaway, I'll bet him I can outperform that too. In the process, maybe get a paycheck at the market rate. Of course, Berkshire Hathaway, I don't know how much those employees get paychecks. Warren Buffett's paycheck as an employee is not anything extravagant. It's not $1 billion a year. CEO paychecks are too high. Well, if anybody in America gets $4 billion a year as a hedge fund, it's a paycheck and a license to try. If you've never tried, like I said, my friend, I tried. Therefore, I don't work for free. Paycheck precedence for a hedge fund manager, movie star, $4 billion a year, $100 million a year. Maximize stock owner value. I don't work for free. Paychecks are an expense, logically. And I don't work for free, logically. I got common sense. I'll outperform the S&P 500.